One thing I would bring up with you that I've noticed over, I started kind of seeing search maybe even come into play probably around 2016, 2017. It's changed a lot since then. But I've noticed, especially in the last 2 or 3 years, that the search community has gotten to a better place where they're kind of getting along with each other and trying to help each other. Do you think that will continue? And do you think that there's ways that people can be better at that? And what could they do?
So the answer, do I think it will continue? One of my colleagues, actually, she's here in the back of the room. She introduced me to a term called trauma bonding. So I'm very familiar with that now, and I think we all go through that together, right? We're going through the dirt. I spent some time in the Marines, same thing. You serve with people beside you. You go through things only with them. Only they know what you go through. As entrepreneurs, we know that's the same thing. Your spouses, they don't know what you're going through. They know what you do. They hear your conversations, but they don't know what it's like to be an entrepreneur unless they're one. So I do think that rise that you're seeing in there in us sharing information, we're bonding because we're all going through the same trauma in that sense. So hopefully I answered the question. I think it was a two-part.
Yeah, no, I tend to just kind of keep the question going all at once. But yeah, I think that was something that we covered at the last meetup as well, was kind of being more transparent and authentic. We see a lot of social media influencers that talk about how you can just buy a bunch of businesses and it's super easy. And so it's kind of nice to see people that have acquired them come back and kind of say, hey, this is actually difficult. And I appreciate you being authentic with what you covered. So.
Yep, my pleasure.
Cool. Any questions for me or Richard?
So you did mention that just with how, I'm experiencing the same thing, which is like just not seeing like a lot of deals that are necessarily hitting the market. And maybe there's a lot of people and individuals that are actually doing their own proprietary outreach driven businesses and circumventing the broker. Mm-hmm. As somebody who's actually contemplating right now trying to maybe getting like a buy-side broker as demoralized as anybody else who's looking like in this room, is that something I need to be like looking out for? Are people they have eligible businesses and the types of businesses that probably a lot of us are looking for? Are they just getting absolutely inundated with inquiries from brokers, buy-side and sales brokers? Is it that bad? Because I'm asking that in the context of like, I'm also contemplating, should I be doing that myself and just like actually looking for like potential sellers and going to them? Or would that just simply be a lost cause at this point because they're getting so inundated with inquiries?
Okay, so I'll take a stab at it too,
Sure,
and I'm
go
sure
ahead.
you've got
Yeah.
input on it. So what I'll say is that the organizations that are experiencing that kind of flood of interest are operating at a certain tier, right? Mm-hmm. So if you're doing that 500,000 EBITDA and SDE and above, then yes. If you're looking at companies that have a valuation of $1 million or more, only 5% of them exist in the United States. So I want you to put that in perspective. If you're trying to look for a business that has a valuation of $1 million, only 5% exist. Everyone in the search space is looking for that 5%. I wouldn't say everyone, most searchers are looking for that. So yeah, your business owners that have that kind of a business that make that kind of revenue, that can garner that kind of a price point, they're being inundated with emails, with telephone calls, etc. And they're the cookie cutter stuff that they're. In fact, I went to an industry association meeting. It was for manufacturers, and I sat across the table at someone who was there we were eating lunch together. And when he found out that I was involved with TCC and the Corporate Solutions Group, and we had a program that we're teaching people how to buy companies, conversation started immediately. Everyone around the table was interested in, well, I've got a company. I've been in business for how many years, and I don't have a succession plan, but I'm curious to know. And they started asking questions. Every single one of them said they received tons of emails and phone calls from private equity or people saying they want to buy their business. Every single one around the table, and they completely ignore it. They just trash it. So to say that it doesn't work, I'm giving you the observation of what they gave me, that it wasn't something that I even pay attention to. I'll give another example. There is a company that my interactions from Corporate Solutions, meaning we the Corporate Citizen Group of Tarrant County College, we go out and we do customized training programs for other organizations. So I'm out in the community for more than one purpose, obviously. But this is a client of ours that wants us to map their tacit knowledge of people that's been working with them for 25 years. And they want to capture that before they leave. And the business has been around for over 40 years. The owner is in their 70s. And the owner specifically made a statement that they get inundated with offers to buy their company, but they don't want to sell the private equity. Literally, it's off their table. If something comes in, it's ignored, okay? So I'm giving you examples of observations of conversations I actually had that's out there.
That's a differentiator, so that's very useful.
Yeah, and at the lower level, how many private equity firms and independent searchers are trying to find a $100,000 business? Yeah, exactly. So I'll tell you, it depends on what threshold you're operating in. I personally find better opportunity to buy at the lower tiers, bolt on, get your operator's legs in, and bolt on and grow, because your first acquisition should not be your end goal, right? That's the start. So
Yeah, especially if you do it that way. Yeah, he's right. I did a turf at our house, and the guy came to give me a bid, and we're kind of walking and talking, and I said, "How many emails a day do you get? People wanting to buy your business?" And he just like stopped and looked at me and it was like, "I'm so sick of it." I just kind of started laughing. I'm like, "Yeah, I figured," because they're a bigger company, and he's like, "Well, what is that about?" And we ended up sitting there talking for like 45 minutes about it. But he's like, "I have no interest in selling. I want to just keep going. I want to keep growing." He was probably in his late 30s, early 40s. So he had no, horizon of trying to retire. What I would say is, yes, they do get tons of emails, calls. They're all sick of it. I've been tracking this year since mid-March transactions that have come in that I've looked at, and I think I'm almost up to 200 that I've looked at. So those are all deals that are under LOI. I would say there's probably been maybe 4 or 5 that didn't come from, like, they had worked with a business broker to put the deal together. To answer your question about having a buy side broker, I don't see that being very successful. There have been maybe 1 or 2 a year that I'll actually see, and I'll say, because I ask them, "How'd you get this deal?" And they'll say, "Oh, I hired a buy side broker and they found it for me." Most of the time, what I hear is they don't end up finding anything different. I've gotten hundreds of calls, emails from people trying to put together either a platform to find deals, or that they'll do the search for them, and they try to sell me on telling searchers to go get it, and I just don't see it be very successful. A couple of things that I have seen where it ends up being successful, even if you're reaching out to a business broker that has a listing, is being very authentic. Do not call and say, "I am so and so with whatever finance, I'm a searcher, I have capital ready to deploy, blah, blah, blah," all the same stuff. Do not have AI write it for you. What the business brokers and the sellers are all complaining about is, 4 or 5 years ago, there was a huge influx of searchers during COVID that went around and just shotgunned LOIs to everybody, like way worse than private equity does. And none of them could come through because they couldn't really get financing. They weren't able to, secure any kind of investors or anything like that. And the business brokers got so sick and tired of it. So now when they have somebody reach out to them that says that they're a searcher, they immediately delete. I don't want to deal with them. So normally if you reach out and say, "Hey, I'm Chris. I've been a general manager at this company for 15 years. I would love to buy something in that space. I've already talked to an SBA lender. I've also got, some friends and family that are willing to invest in me. What do you have? I'm interested." You're going to get a lot more traction, and you're going to get, a lot further down the road with kind of going with that approach. Outside of that, if you do actually get in front of the seller, in front of the broker, it's extremely important that you get that seller to like you. Like a couple people have said, most of them have heard from their friends, their family, like the type of situation after the fact when they sell to private equity doesn't go the way they thought it was going to go. Most of those sellers genuinely care about the employees. A lot of them, it's second, third generation employees, right? Their biggest fear is that someone's going to come in, Day one, what does private equity usually do? Oh, we don't need, 25% of the staff. In reality, the little old lady working in the front, she's the one that runs the company, and they don't understand that. And they wipe them out, and they can't understand why the business failed. So if you can get the seller to understand that you are not coming in there and you're not going to blow up the company and implement a bunch of things that are going to cut a bunch of staff, they're going to listen to you, they're going to talk to you, they want to envision you taking over their business and taking it to the next level. So those are usually the things that I've seen when people are successful and they get their LOI accepted, when somebody's got hundreds of LOIs on one listing because it is in that 750 to a million 250 in EBITDA. And that's really kind of the only way you're going to try to get through. But the other thing he said is true. Um, Finding smaller deals is a little bit easier. It does require usually a little bit more work to kind of weed through the financials and all of that. They're
He's
not
being
usually,
very gentle when he says a little bit more work.
yeah,
Yes.
they're not usually going to have a controller on staff or anything like that. But it is a little bit less competitive when you do it that way. So
Jared, to be clear, you said the 200 deals you've looked at so far, all but a handful were broker deals?
yeah, yeah, like so if we're looking at it, I mean, it'll have a sim. It'll, it was listed by a business broker. It's very few that come directly from, they outreach or something. But then we
But
do
to
have
be
people.
clear, it wasn't a buy-side broker, right?
Correct.
It was
Yeah,
the broker representing the seller, correct?
yeah. So it was a listed business. Yeah. It's very rare that I'll get something where like, how'd you get that? Oh, well, I just went directly to the seller. Sometimes we'll hear, oh, well, I, knew that was the industry I wanted to buy in. So I spent a lot of time at like trade meetings and stuff like that. And then somebody, told somebody that they wanted to sell and I was able to talk to them. It is also, I'll tell you, is when there's not a business broker, as frustrating as the business brokers can be sometimes, I end up being the broker most of the time if there's not one, and it's like super frustrating. Not only because I don't get 12%, but it's like I'm sitting there trying to get them on the same side, and it's really difficult, especially then if they don't have legal counsel. I'm like, I don't even want to work on this. Like, at least get one attorney and work together. It's like trying to get divorced without a lawyer. It's like, forget it.
Okay. So a hand up there and then your hand up. Yeah.
I just wanted to touch on like a couple topics back about how he was saying that like you don't realize that the little lady that works the front desk or whatever, she really runs the whole entire company, and like the importance of that. But because on the flip side of that, when we went to buy like my business, there was one employee and the owner said, if you want to keep her just to get through the busy season like that would be great or whatever. But then when we actually went to go meet her, Jared was talking to the seller. And then I was talking to her and she said, oh yeah, my kids are, they grew up here just like your kids are really small. And I said, how long have you been with the company? She said, 20 years. And I said, like the seller had just made it out like he just had this manager, if you want to keep her or whatever. And I said, 20 years? And she's like, yeah, I've worked here for 20 years. So he downplayed it. Come to find out after we bought the business, like there were customers that would call and if he answered the phone, they would hang up. Then they would call back and wait for her to answer the phone. Or people that they only wanted to deal with her because he was this, crotchety old man or whatever. That was not great. So fine asking those questions because I wasn't planning on keeping her. And then once I realized that she knew the ins and outs of every part of that business, and she knew, the vendors and all, and had the relationships with these customers, she was invaluable to the company. And I almost missed out on that too. So asking questions like that is super important.
So I know you have your hand up. Go for it.
I actually want to add something to you. So I've looked at lots of deals at this point, and I would say, I think about 400 at this point, tracked and everything, right? I would say over 90% of them, all of them are from this line of thought, by the way. This is not proprietary, right? I would say over 90% of them give me a call back. And I use this two kind of punch thing that I found that works, right? You send a note with their name, right? What the broker's name is, a message, hey, I'm interested, and then you give them a call back within 10 minutes of that message being sent, and you always start with their name. Like, Jared, hey, saw this listing, this is my background, I'm interested. It has not failed so far. So what I will encourage you, first of all, like you have done, biz buy sell, there's deals out there, right? The one that I'm currently on the LOI, I found it on biz buy sell. right?
So just so we know, we have a biz buy sell guy that's here tonight.
Yeah.
He didn't pay us, any of us, to say any of this, okay?
I'm gonna start charging you guys.
Well,
Right? But also try that methodology of being very personable, right? That quick follow-up, and you will see that convert.
My issue is not that particular problem. Like I do get a pretty good response just because I'm persistent on the outreach. Mine is just simply deal flow, it's finding adequate deals. Although
Right.
you may have, I mean, learned something here today because I love what you're saying about the bolt-on. I mean, that is, I think, that's a very valid point that maybe I'm looking too big, and that might be an easier entry for me.
Yeah, and I mean, I'll tell you, like only maybe 15-20% of the deals that I look at that they're coming to me for financing, they're under LOI, I can actually do. So there's a lot of bad searchers out there too, and then of course there's a lot of bad sellers and listings, brokers like that are overpriced. That's usually the problem. It's usually overpriced or the buyer's not well qualified. And so it's just as frustrating because we have to filter through it. We have to run the numbers. We have to try to figure out if we can do it or not. And it's just as frustrating.
So in two of my examples, I talked about having a relationship with the business owner that has nothing to do with the acquisition piece of it, right? That's the bringing and adding value to them, and that's building a relationship. We don't walk into a room, if you're a single person to date someone. Now, I've been married for 34 years, so I have no idea what I'm about to say. Just keep that context. But if you walk into a room today, you don't start saying, hey, I'm so-and-so, I got this much money, I can do this, and let's get married. No, you don't do that, right? You build a relationship, you find commonality, you add value to that connection that you're trying to build. Now, granted, you may say you don't have time for that, but again, when a searcher tells me they've been doing this for 2 years, you had time for that. You had time to add value to the company without having to take a stake in it. You could just say, hey, I noticed you're doing this. This is, if you tweak this, if you do this, I can help out. I started working with a private equity company by volunteering with them for several years before they finally said, Richard, come and do this for us full time. I gave them that add value. I added to their deal flow, their pipeline, their domain expertise until finally they said, come and do this for me. That's also an avenue as well. There's so many associations out there. If you go to the association meetings, you just listen to what they're going through. If you have a tool or you have a tweak or you have a suggestion, add value to the conversation and build that relationship. And then a year, maybe 6 months, maybe 3 months, maybe next week, they may have such comfort with you. Okay, that's kind of stretching it next week. They may have comfort with you, but you now have an inside track to the owners, to the business owners. Bring value to the table. That's another way I suggest to get out there.
Definitely network as well. There's a lot of times when I do have somebody ask them, how'd you find this? Somebody I go to a networking group, they found it. It didn't work for them, but they were able to pass it off to me. Don't charge each other. I hate when people do that. But just, obviously let each other know what you're looking for.
And I'll give one more example. There's a gentleman in one of our cohorts that came in. He was one of the case studies we brought in. Successful acquisition with a $30 million company. Private equity was backing him, got into the deal. Then a few years later, it went sideways, had to give it up. But his resilience with the private equity firms, they saw that, and they actually started getting him to come back and do turnarounds for other organizations they had on their belt. That wasn't the story I'm leading to. The story is that he now purchased another acquisition from his relationship with a gentleman in his church. So they had a shared value system, and he interacted with them at church. And the gentleman had a plumbing company that he's been doing for 30 years and just wanted to give it up. So he tells that story about relationships, connections, proximity, that kind of stuff. You had your hand up.
Can you all share your thoughts on programmatic acquisition via franchises and how many of those deals are you seeing?
Deal flow.
Sure. Yeah, I would say the franchise world has changed drastically in the last probably 6 or 7 years, and it's the same reason as search, right? It's because of private equity. I don't see a ton of franchise deals especially as much as I used to maybe 10 years ago. A lot of the franchises that we do see, we'll go and we'll look at, we get data from, basically from SBA and from other lenders that'll tell us, how they've done historically with their SBA loans. And then also there's Fran data, which will give you some information on the actual franchise. They'll kind of score the franchise. A lot of times it can be off, but it at least gives you some kind of detail. What we saw happen is there was a lot of private equity rolling up the franchises, and then they sort of went away from kind of the old school being there for you, being heavily focused on the actual franchisee rather than selling franchises. And a lot of them have, kind of gone downhill. And I think that's probably the big reason why I don't see a lot of them anymore. It may also just be the size of transactions I see a lot more now are larger, and you don't usually see that unless they're buying multiple franchise units. I think it still is a good way to have sort of a playbook if you don't know everything about that industry. But we're seeing a lot more people kind of shy away from them just because the franchise themselves getting in trouble, or they're opening it up and allowing more units because they're trying to sell them, and they end up cannibalizing each other, and it just seems to be a little bit frustrating. And then within our bank, we have just a very specific franchise group that doesn't use SBA lending. They usually are dealing with multiple operators. They've had a lot of trouble, to the point where it spills over into our world, and we're like, hey, that wasn't our fault. Like, they say, oh, we can't do this franchise, that franchise, because they're seeing high default rates with specific franchises that they weren't seeing before. So it's become sort of a problem, and I'm not sure really how to fix it or what they're gonna do. But there's still definitely some out there that are good, but it's been tough.
So
Sorry.
just to add to the franchise comment, again, observation experience that I directly had. I don't know how that affects the deal flow that you're seeing. One of my sons was interested in getting into a particular business, and he got a license to operate in that space. And I was trying to encourage him to buy buy a business in that space instead of starting something. We looked at a franchise, and it turned out that the franchisor actually provided 100% financing for those deals to acquire an existing company that's out there. And you get their book of business and all that sort of stuff. The only thing is you had to have the license that was specific to that particular industry. And I'm talking about the insurance industry in this particular case. So if you came with that license, or you were able to get it relatively soon, and they had a very, very low capital requirement, on their end, but they did 100% financing. So they were not seeking going out and deals, getting SBA loans, or getting those partnerships with institutions. So I don't know if that had an effect, but I saw that in that particular industry. So you had your hand up, ma'am.
I was going to say something about that and ask a question. These franchises are really attractive, especially people starting out, but there's a reason why they're staying with us. I think that in 2026, there's so many tools and ways for people to really find the truth about these franchises. Many of them have very predatory contracts, and they have found ways to make money when you fail. In certain situations, they can be even more profitable when you fail than making money when you buy a franchise. So,
Oh, come on, tell us who it was. Tell us who it was. Let's go. I'm kidding. No.
Yeah, we saw that. I mean, yeah.
said some of them are still good. It's like that. They're very far different. Like a lot of the brand names that you know are the worst. So, when someone goes into acquisition, they have to be pretty delusional. But the people who buy the big name franchises, they have a very high income because they're ignoring everything to do that.
Yeah, a lot of what we saw was they would allow the transfer. So that's the other thing you have to remember is if you acquire one that's already a franchise, you have to get approved by the franchisor. And for them to transfer it, there's always a transfer fee, right? So you're paying again for that, even though they already got a franchise fee on the front end. So they're transferring it. But then a lot of times what they're doing is they're saying, okay, we'll allow it to transfer, but you need to open 2 more units within 18 months or 24 months. As a lender, we're like, we're not doing that deal. No, because what happens is the second that they take over that one and they kind of get their feet under them, they're like, now I have to figure out how to spend another $150,000, $200,000 to open another location, and they're more focused on growing and adding more locations that they forget about the one that they just bought, and then they end up failing, and we end up losing the money. So they just got heavily focused on selling units rather than actually investing in the franchisee and making sure they're successful.
make money either way. So one of the best numbers to look at is their turnover.
Yeah, you can get the franchise disclosure document, and then you can look at it. It'll have all their units, and then it'll show you like if any have been bought back or failed or transferred, or how many they've sold, how many they still have sold but haven't actually opened. So that'll give you a lot of information to look at.
Or say, don't buy a Dickie's barbecue.
Oh God, yeah.
So two questions. One is, why is there such a variance between institutions around post-close liquidity? I'm running into some that say, we don't need anything, we're good, right? And others that are as high as 9% of the loan amount, right? So that's question number one. And then I want your insight on the latest SOP around ownership, or seller being, not an ownership, but the seller actually staying with the company, right? I'm seeing two thoughts coming in. Some say they only can be a 1099, but I'm dealing with other banks who are like, no, they can be a W-2 because it's the way that you read the SOP and I'm a key employee. So,
Sure. I'll answer that one first. So with the seller staying on, the SOP says that they can be a consultant for up to 12 months. Really what they're trying to say is like, and then it also says they can't be a key employee or an officer. So if they are being, a salesperson or they're just sticking around, I mean, at the end of the day, normally what I tell people is you can sort of figure out where they fit in best and what you want them to do. Is sort of leave it vague. If the contract says seller is available for consulting for up to 12 months, okay, you met it. If whatever you want to do after that. But then when I get a 40-page employment contract with the seller, I'm like, no, that's there, and it basically outlines how they are a key employee. We're like, no, we can't do that. So that's kind of more of what the way to sort of circumvent it without getting it. We, as most very experienced lenders, we think the rule's stupid, and so we want the seller to stay involved most of the time. I will tell you, there's a alarming amount of times that buyers will call me about 11 months in and go, what was the rule that is 12 months? And can you send me an email so I can get the seller out of here? And so we have to go in and tell them, oh yeah, they can't be there more than 12 months. And then that's how they basically fire the seller. So there are times where, hey, you served your purpose, but you got to go. And then as far as the post-close liquidity, Huntington, I know, is the one you're talking about. With us and with most lenders, a lot of it's going to be on their experience and what are they seeing, what are they having trouble with in their portfolio. Unfortunately, it's kind of the same game over and over again. Everybody learns from their mistakes. What is happening right then in their portfolio? If they're having a bunch of failed HVAC businesses, suddenly HVAC's the devil and we want nothing to do with it, right? And that's just unfortunately how it goes. So when you see lenders that are increasing their liquidity requirements, it's often because when they're looking at what went wrong in their portfolio is because they didn't have enough liquidity. Outside of that, it also can be very industry driven and also how the business model is. If they're, taking 60 to 90 days to collect cash, you're gonna need a lot of cash. If you're doing an asset purchase and there's a lot of contracts or working with the government, it's got to transfer over, you're gonna need a lot of cash. So you may see it differ because of that. A good experienced lender should understand working capital and should understand the cash cycle of the business and where you fit into that and what you're going to need. At the end of the day, I've never had somebody call me and tell me like they failed because they had too much cash. So you could never really have too much. So I could sit here and tell you for 10 hours straight the things that have gone wrong in our transactions afterwards, and almost all of it is something to do with working capital. So you can never have enough. But with us, I mean, we have kind of tiered pricing based on the strength of the deal. One of the big things we look for is post-close liquidity because that's what we've seen. It bails you out of trouble later on. So, but it is not something where we look at it and go, they don't have enough. If you don't have enough, we're not going to do the deal, period. No one should do the deal. They shouldn't have let you do the deal. But we don't have like a set, 10% of the purchase price benchmark. That doesn't really make sense either. So, yeah, it's just big banks being weird.
There is a difference between working capital and post-close, because
Correct.
they get working capital into the loan amount.
Right.
That takes care of it 1 or 2 months. Post-close is separate,
Correct.
and that's more on.
Yeah, and we're always going to build in working capital and make sure you've got enough working capital, but having that, cushion individually, like you make a lot less, rash decisions when you have cash in the bank. So it's kind of more of the mindset of looking at it. And then again, we're also going to look at how do you treat your own personal balance sheet before you buy the business. That's usually a pretty good indication of how you're going to run the business.
At what point should a buyer approach you or a investor in that process? Who wasn't lining up that you had?
Yeah, it's a good question. And that's probably like one of the biggest questions I get. I like looking at deals. It's probably one of the like last things that I still really, really enjoy. I could be exhausted at 1 a.m. and I'm like, oh, it's another deal. Let me go look at it. Let's see where the broker messed up. Anytime, I'm happy to look at them ahead of time. I also find that it's a lot easier for the buyer if they approach us early. Worst thing you can do is go put out an LOI, bring it to me, and I look at it and I'm like, there's 11 things in here that are ineligible. Now you have to go back to a seller that was just super excited and told his whole family he's selling his business and he's under LOI. They may kick the deal out. So it's a lot better if we can review it together. I'm also happy to educate people and kind of go through, here's what we're looking at, here's how we're calculating debt service coverage. Makes it easier when you're looking later on at other businesses. So there's a lot of lenders that say, call me once you're under LOI. And I think a lot of them, they're just don't want to do the work up front. But I actually really enjoy it. So
Can I also add to that the SBDC rep is not here anymore, but that's another resource for all of you. Small Business Development Center, their business advisors have relationships with pretty much every bank in the region. And they know which bank likes which kind of deals. They know, I kind of describe them as an extension of their underwriting team. They've done so many deals with them that they know what they like, what they look for, and how to package it, so to speak. So that's a free resource for you. The earlier you engage them, the better, because you're really getting those eyes to help you put that, whether or not this deal is worth pursuing. So, and it's free. So,
Thanks for putting
cool.
this on.
Yeah, no problem.
No, thank you guys.